The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
And welcome back to another episode of The Credit Authority. Once again, I am your host, Rhonda Kulch, and I am so glad that you joined us today. We have such an amazing lineup. However, before we get our show started, we always want to take a moment to thank our sponsor. So thank you so much to Equity First. If you are experiencing credit and or financial challenges, feel free to reach out to any one of their trained professionals. They are bilingual, nationwide, and waiting for your call. They can be reached at 631-714-4822. And with that said, we're jumping into our first guest. I have with me in studio today Tim Kennedy. He is a senior we're going to rephrase that. We are a reverse mortgage specialist with U.S. Mortgage Corporation.
That's right. Yep.
And you actually are the host of another show here on LI News Radio.
That's right. Thanks. And Rhonda, thanks for having me today. It's great to be here. Yeah, so I have a show on Mondays at 3 p.m. called It's Just a Mortgage. And as a certified reverse mortgage professional, I kind of talk about the wrong information or the misconceptions of reverse mortgage and really, today's benefits of how it can help homeowners over the age of 62, age in place, maintain financial independence, and, plan for a more safe and secure retirement.
And, that's the reason why I brought you on today. The market has been fluctuating, we'll say that respectfully. I do business nationwide. So the market here in New York is definitely different than, for example, the pulse of the market in Florida. But my business comes in from a variety of different places. And the reason why I wanted you to come on today was to speak a little bit about the reverse mortgage market and how people can really take advantage, because with the changing of the interest rates, yep, I feel like people who may traditionally want to take advantage of a forward mortgage really can't afford it. And they're in positions right now where they're looking at alternative types of financing.
Sure. So look what's happened over the last several months, right? Interest rates were from 3% to 6%, 7% in a blink of an eye, right? So now they're trending down a little bit. The last 4 or 5 weeks has been trending down a little bit. Inventory on a home purchase is still, very tight. That seems to be loosening up a little bit now too, but, it's still, it's not where it was, 2-3 years ago when it was a free-for-all, right? But with the idea of the reverse mortgage today, especially with seniors, obviously, right? Because to qualify for a reverse mortgage, you have to be over the age of 62. But the idea today for them is if they can't afford to live in the home that they're currently in, like if they're struggling, a lot of realtors today, they go to a home to do the listing presentation to try and sell their home. And the homeowner says, listen, I can't afford to stay here and I can't afford to leave. So how can that real estate agent help them with that need or that want? And the idea today, and it's really the best kept secret out there, is the reverse for purchase. That homeowner over the age of 62 can sell their home. And for all intents and purposes, let's say the house is free and clear or a very small mortgage. They can sell that home and then just use a portion of that money to downsize and purchase another home. So instead of using all that money from the sale of their current home, use a portion of it, buy that other home, whether it's in New York or somewhere else, and then I could finance the other part of that purchase with the use of a reverse mortgage, a reverse for purchase. And now they can move into the house of their dreams that satisfies their wants and needs without the obligation of a monthly principal and interest payment. It's the coolest thing out there, and nobody knows about it.
Which I love. So I'm going to break it down from another angle. So I am helping facilitate, because I'm not old enough yet to do a reverse. I'm helping to facilitate a client for a reverse purchase. They are cashing out of a home that they are selling. How do you qualify them from a loan to value perspective? Because obviously on the show, we feature other mortgage professionals that speak about a forward mortgage.
Sure.
And it requires what we call a standard down payment, 10%, 15, 20%. How do you qualify a senior for their down payment requirements?
So a reverse mortgage is very unique when it comes to that, right? So what they qualify for is based off of the age of the youngest borrower, the appraised value or the purchase price of the property, and then there's what they call the expected rate. And what's the difference between a reverse mortgage and a forward mortgage? We don't necessarily look at a specific debt to income ratio or a specific loan to value or a debt to income ratio. It's really a financial assessment. Does that borrower, does that homeowner over the age of 62 demonstrate the ability and the willingness to pay their bills? And then based off of that, that's what we would qualify the LTV. So for example, the younger you are, if you're 62, you'd qualify for like somewhere between 45, like somewhere around 45% loan to value. If you were 85 or 90 and you wanted to purchase a home, you'd qualify for like 70 to 75% loan to value.
So in other words, I hate to say it like this, I'm sorry, I'm laughing. The closer you are to death, the more money you're going to get.
Well, so it's right. It's all about life. It's all about life expectancy, right? Yes, of course.
So now another factor that pops up on occasion when I'm handling clients' businesses and affairs is obviously credit.
Yep.
I've had clients in the past that wanted to apply for certain types of financing, but because of their credit, and again, we're talking about debt to income ratio, they were ineligible. So as much as you've mentioned right now that this is a financial assessment, how does that credit and DTI element factor into whether or not an underwriter will accept them into the program?
And you're talking specifically reverse, right?
Specifically reverse.
So we will run their credit. We will look at their income, right? And we'll base it off of, again, their ability and willingness. So it's really not a specific FICO score or a specific debt to income ratio. It's really a financial assessment and a residual income, right? So at the end of the month, after they pay their taxes and insurance and the utilities, do they have enough money to put gas in the car, put food on the table, and pay for the gas and electric, right? Mm-hmm. It's more of a calculation based off of that. But if they don't qualify, and here's what's cool about a reverse mortgage, right? Let's say, for example, they fail that financial assessment calculation. With the reverse mortgage, what they instituted with the reverse mortgage is a LISA, a life expectancy set aside. So what we'll do is we'll set money aside and pay for the taxes and the insurance, right? And still give them the reverse mortgage, right? So it's kind of...
It's almost like a financial tool.
Well, 100%. It's definitely a financial tool to help the seniors age in place, stay in the home that they want to stay in. And, or like I mentioned before, if they wanted to relocate, they could do that with a reverse for purchase.
So one of the things that pops up, again, when I'm speaking with my clients, and I have a scenario currently with a client right now, it was a married couple. The husband qualified for the reverse mortgage and the wife did not. And now he has passed, and she now is responsible for refinancing the loan, and she's not eligible.
Well, we should talk about that off the air because I could possibly help you with that. So in the olden days, right, 20, 30, 40 years ago, a reverse mortgage, if you were 62 and your spouse was under the age of 62, we took that borrower under the age of 62 off the loan, off the title of the house, and they had no responsibility to the home. So what happens? The borrowing spouse passes away. Now the non-borrowing spouse has no rights to that home. Well, in the I forget the year, but about 12, 13 years ago, they put into place the non-borrowing spouse provisions where the non-borrowing spouse is now protected. So if the borrowing spouse passes away, the non-borrowing spouse can now live in that home for the duration of their lives, provided they pay the taxes and insurance. So my question to you is, when did they take out the reverse mortgage? How long ago? How old was she? Were they married when he took out the reverse mortgage?
Yeah, I can't answer those questions.
Yeah, so let's talk about that off the air because we could probably help her.
Which I love. And, when we're looking at the reverse mortgage, again, let's talk for a minute about what the requirements are. We know that it's age requirements, but how about the overall process, right? So walk me quickly through the process.
Sure.
How long does it take? What protections are in place for the seniors? The biggest thing that I hear is, I don't want to reverse, the government's stealing my home. So take a minute to talk about that.
Okay. So first things first, right? One spouse has to be at least 62 years of age in New York, right? It has to be their primary residence, 1 to 4 family, provided they're in occupying one of the units. They're still required to pay their taxes and insurance and maintain the property. So what's the process, right? So I would sit with the client, look at the application, right? See what they qualify for, look at their income, right? Then at that point in time, they're required by the federal government to do a third-party independent counseling, right? Because the federal government feels like I'm financially motivated for them to take out that reverse mortgage. So they want somebody else,
An independent third party
and
to verify the information.
to verify what I'm telling them is accurate, what's on the and again, explain to them on the paperwork what's happening, right?
Sure.
And what's happening. They're taking out a mortgage that most likely they're not going to make payments. So what happens when they don't make payments? The balance of that mortgage will increase, and they'll owe more later on in life, right? And they want to make sure that the homeowner understands that. Number two, they want to make sure that they're of sound mind, for the most part, right? Who is of sound mind? Any of us are, right? But for the most part, they want to make sure they're of sound mind. And number two, they want to make sure they're not being coerced by a family member, a stranger, me, or whoever. And that's kind of what goes on during the counseling session. They'll ask them questions, they'll go over the paperwork, and then from that point forward, it's an FHA loan, right? So it's federally insured. We'll close within 30 days, 45 days.
I love it. So once again, we are in studio today with my friend Tim Kennedy, U.S. Mortgage Corporation. And Tim, if somebody wants to touch base, how do they reach you?
Sure. They can call me at 631-750-0520. 631-750-0520.
Amazing. Stay tuned. We have another amazing guest coming on.